Hello, everyone. Hello, this is Charlie Tian. I'm the founder and CEO of GuruFocus. I'm very glad to see you again. Say hello to me. Tell me where you are. And I'm in Allen, Texas. Actually, today I'm not in my office in Plano, Texas. I'm in Allen, Texas because we have snow, and when there's snow, everywhere is closed in Texas, in Dallas area. When the school is closed, all the companies are closed, and even the snow is actually less than 1 inch. But because of weather condition here, the snow will quickly become ice. It's very dangerous to drive in this kind of condition. But Sydney, she's assisting me with this session. She's in our office, and she drove very carefully to the office and to do the streaming. Thank you very much, Sydney. And thank you all for coming. Actually, I'm very excited again, as always. I'm very happy to see all of you. And yeah, say hello to me. Hi, and Ergang and Mopani. Thank you all for coming. And first of all, I want to share the news of the GuruFocus Value Conference. And if you are with us for a while, if you are with GuruFocus for a while, for several years, you will know that we have been hosting an annual conference, and every year, for several years, but then it was interrupted by the pandemic. And you can learn more about the conference. You actually can see that that we add an item here for the conference, and you can click on that. You will learn more about the conference and also the past conferences. The one we have this year, it will be in Omaha, of course. It will be in Omaha on the Thursday, from Thursday evening and the Friday before the Saturday Berkshire Hathaway annual meeting. So it would be May 4th and the evening of May 4th and the Friday, May 5th, the whole day, the entire day. So usually we will have 10 speakers to speak, to share their investing strategies and to share their stock ideas. And you can see the past speakers here, but by just click on the past speakers menu here, you will see that we have a very rich list of speakers in the past, and some well-known, very well-known, and very successful value investors: Chuck Royce, Mario Gabelli, and Francisco Paramis. He's from Spain, and a lot of them, and some like Chuck Actor and James O'Shaughnessy, and many of them, Donald Yachman, actually, and Professor Bruce Greenwald. So we had lots of speakers in the past: John Murray, Everyard, and Tom Russell. We had lots of successful and well-known value investors, and where this year I will be inviting similar level of investors to come to the conference to share their investing strategies and their stock ideas. So there will be only 120 seats available, and it'll be in the Hilton, just next to the Berkshire Hathaway meeting, Hilton, downtown Omaha, and I'll be looking forward to seeing you there. And now let me come back to our website. That's the main purpose. That's the purpose for this meeting today, actually. And in the meantime, whenever you have questions, feel free to type it in the chat area of the YouTube channel, and I'll be answering the questions. And as usual, I'll go through what we have done lately, the new features, and then I'll go through some of them in detail, and I'll also go through some other features and answer questions. As always, when you need support, when you need help from us, you can always come to this support button here. And this support button allows you to do chat support during the business hours like it is now. And you also can create a support ticket here. You can also schedule one-on-one meeting with us. And with one of us, we will give you a very detailed explanation, answer any questions, your personal questions you may have to the website. And you can do all of this to get support. And you can also call us during the business hours. The phone number is here. And yeah, that's where we are. If we look at what we have done lately, you can always come to the change log here. The change log here will tell you what we have been doing lately. And I'll go through some of that. For instance, the first one says that we add the industry distribution chart for each industry financial indicator on the summary page, on the stock summary page. What does that mean? Actually, it means this. If we come to our website at GuruFocus.com and always log in your account, log in your premium account if you're a premium member, always. And a lot of times, actually, a user may have two accounts with us. One is a premium account, the other is a free account. And he would log in the free account and asking us why his premium features are not available. That happens actually a lot of time. But make sure that you always log in your premium account, and you can see either a premium here or premium plus here, or we also have a professional level of membership. If you're professional level, it should show a professional here. And so what we did was that for the stock page, for the stock summary page, and for every indicator, we added an industry distribution chart here. You can see this. If I put my mouse on this bar here, cash to debt bar, it shows the cash to debt of Walmart in this case, and also shows the distribution of the cash debt for the complete retail defensive industry. And the distribution where Walmart is this red bar, and the distribution is like that. It's actually not like that. Walmart is actually on the low end of the distribution, and here you see the percentage of the distribution. This is for one parameter. You can go to another parameter like gross margin, for instance, a very important indicator for retails. And see, Walmart has a gross margin of 24.38%, which is in the middle of the industry, actually. If I look at here, the percentage-wise, it's at 57% percentile. So it's not that bad. Not that bad, and it's about middle, and that's Walmart's gross margin. If we look at its operating margin, it's actually slightly lower toward the lower end, and if you look at the net margin, it's also toward the lower end. We know that all the retailers usually have very low profit margin. If we go to, for instance, another company, Apple, just as an example, and we look at that profit margin, the gross margin, Apple has a gross margin close to 100%. And the operating margin also very high. And the net margin is 25%. It's actually above 95% of the company in the industry. You can see that the gross margin is actually 81%. It's above. Okay, it's 43 gross margin. It's better than 81% of the industry. The companies in the industry. You can see it's displayed here. The Apple gross margin is 43%, better than 81.65% of the company. That's how you use this pop-up chart. And for instance, the return on assets, so actually on the very top portion of the industry, if you look at this, it's and return on capital, which is a very important factor. At 56%, it's above it's more than 98% of the company. So that's how you use this data, and give you this data will give you an idea of how the company is for others among its industry. And actually, if you go lower, there will be other factors, like the valuation. In case of Apple, the valuation is actually in the middle, about actually valuation with a P ratio is worse than 61%, as toward the high end of the P ratio for Apple. And if you look at the ratio, it's actually about in the middle, in the middle, about the middle 53.81%. So that's how you use data. And I'm on the stock summary page. And if you want to look at any stocks, you just search here. It should bring you to the stock summary page. It's always the first one in the selection. And then you can see that how the distribution is. The page you see might be different from what I see, because the reason is because that we have a customized function. You can customize this page. So that's why the page you see might be different from what I see. And you can easily drag and drop all the components to different positions. You can also remove them. If you don't like it. You can add new ones. We have some which I didn't put it in, but you can add like a segment chart. And this will see it's already added here, and it add Tesla segment chart is here already. And Tesla, most of the revenue is from automotive business, and energy is about 5%. That's how you use this page. And this is actually the most important page for the stock page. And you can get lots of information here. Of course, on the top, we have the GF score, which is a measurement of overall quality of this stock. So it includes a company's profitability rank, financial strength, a growth rank, and also stock valuation, and also some momentum rank. And that's how much Tesla is ranked. Let's look at Walmart. And Walmart is 85, which is better than Tesla, and Apple. Apple is 97, which is extremely high. Okay, any questions so far? Any questions? Okay, if there's no questions, I'll continue. And this chart, I introduced it twice in the past. So this is how Apple makes money, and it shows you how Apple, the different industry, the different segments contributions for Apple, and in the latest year, and also we have added quarterly data. And last time when I have had this meeting, we only had annual data. Now we have quarterly data. You can check the historical different quarters. You can check that. You can see that the segment combination percentage might be changing. In the past, you can see in 2021, iPhone had a higher percentage. But as of today, iPhone, the percentage declined from 53% to 47%. So that's how Apple has been changing, developing new services and new segments in their business. So that's why the back business segments contributions are changing. And this is about the chart I was talking about, the industry distribution chart, which is this bar chart here. And hope you find it useful. Lots of parameters here, and yeah, I hope you find it useful. Any questions? And seems like very quiet today, and I don't get many questions. But okay, let me go on to the next changelog. The next one, okay, we added Guru top holding pie to a Guru summary page. Okay, let me go through that a little bit. Let's go to, for instance, Warren Buffett's Warren Buffett's page. You can see that we show the chart we added is actually this chart. It's a pie chart, and it shows Warren Buffett's top holdings. Of course, top holding is Apple, then Bank of America, and Chevron, and Coca-Cola. His traditional top holdings are now here, and now like Apple is now top holdings, and Bank of America, he got it during the financial crisis. And this chart, you can download them. You can download them to use it in your own presentations if you need, in your own articles. You can also share them. You can share them on your own social network, and also embed it. So you can, that you can use it in different ways. So if I just, for instance, I just do a Twitter here, and it should tweet to my Twitter account. And if I just tweet here, if I copy a chart here, it should show to my Twitter account if I post this chart here and tweet. In this way, you'll be able to share this to your in your social network. That's a new chart we added. Let's, for instance, go to a different guru, George Soros, for instance. I search George Soros, and that's a chart we added. I should load here historical top holdings, and also in the pie chart here. It takes a little bit of time to load because it's a chart, and it's a chart. It takes a little bit of time to draw. In George Soros' case, and his top holdings are far from that concentrated as Warren Buffett's. So the other portion is a large percentage. That's a new chart we added. Okay, let me look at questions. In the income statement breakdown lags at least 3 to 4 quarters for Europe. As far as I know, for European countries, they are required to report the financial data once every 6 months, not once every quarter. So by definition, there will be more delays because they're only required to file the report once every 3 quarters or 3 months. And that's my understanding. And they usually report, for instance, a very famous LV, the GH company. And if we look at their financial statement, we can see their report frequency here. And they are actually, as I said, you can see that for Louis Vuitton, in this case, they're only required to file the financial statement once every 6 months. And for Turkey companies, if you can give me an example, give me an example of a ticker, and I may be able to look into it. But okay, SISE, Turkey company, okay, and also for the segment data, okay. Now let's look at the financial statement, and the financial statement. Yes, the financial statement does show that it reports every 3 months. You're correct on that. And now let's look at the financial statement data. And okay, and let's see how this company. I actually have no idea what this company does, but we can always look at the business description if we need. Okay. If we look at 2022, 2020, 2021. 2021 is here. And 2022, I'm not sure because I'm not sure the financial, the fiscal quarter. Let's look at the fiscal year end the fiscal year end is December. So for 2022, the data is not out yet. The data is not out yet for annual data. So we can only check the quarterly data. For quarter data, okay, what we have is seems like what we have is March of 2022. Yeah, it's possible that we'll have more delay for the segment data. In this case, it takes time to collect the data to make sure they're correct. It's possible we have more delays for non-US companies for segment data. And fortunately, good thing is that the segment data should not change. The percentage should not change that fast. It should not change that fast. So I hope that this chart is still useful to you. And it seems like the company is doing pretty well. This company has a very good margin, and the stock has been doing extremely well too. Didn't realize that. Stock has been doing it very well. In 5 years, 700%, more than 700%. And very few US investors know about Turkey stocks, I believe. But thank you for introducing this company. I think it's a very interesting company. Let's look at the business distribution. This business description, as you said, it makes glass and chemical product. Yeah, it's holding companies sells glass product, chemicals, glass packaging. Okay, I see. Yeah, it looks like a very, very interesting company. Very profitable too. It's the market, Turkey market. I'm not sure. I'm not familiar with it at all. But there must be some great companies. This might be an example of that. Okay. Any other questions? If no more questions, let me go to the next item. I was about to talk about. Okay, we actually on the 20th of last month, we added the segment data into Excel add-in. How many of you have been using our Excel add-in? Can you let me know? Among the audience we have now, how many of you, if you're using Excel add-in, please reply in the chat area and let me know. I want to know how many people are using the Excel add-in, or you are familiar with the Excel add-in at all. And let me know in the chat area. And in the meantime, I saw a suggestion by Prasanna, AVGO. Okay, we can certainly look at the AVGO. Broadcom, yes, Broadcom. Broadcom, how do I think about the balance sheet? We give it a 5 out of 10 for the financial strength. Usually in this case, means the balance sheet is so-so. It's just not that great. But if it's if the company that makes lots of money, and the financial strength, financial balance sheet, and it can support the debt easily, the debt payment easily, it won't be a problem. It will not be much of a problem. Let's look at the income statement. And in this case, consider that the operating income the last 12 months is about 14 billion. Interest payment is about 12% of that. So it should be okay. It should be fine. For at least for last fiscal year. Previous years, the debt payment had a higher percentage. So it looks like for Broadcom, the financial strength is really not that good. And but seems like the interest payment is still okay. but that's where it is. And I think the company probably has quite some debt. So that's why the the company has, long-term debt. Yeah, the company has 39 billion of debt. Wow, that's lots of money. That's lots of debt. Compare the cash it has. The cash it has was only let's look at the cash. Cash equivalent is about 12 billion. 12 billion. So the company has 39 billion of debt and has 12 billion of cash. Fortunately, the cash flow is still good. So, but it does have a loss of debt, and the financial strength is not that good. The balance sheet is not that strong. That's what it is. And let me go back to the Excel ID. It seems like no one among the audience I have now, no one uses our Excel ID. And if you're not using our Excel ID, you're missing a lot. And let me spend some time on that. And if you come to tools here, you can see that one of the tools we highlight here is Excel ID. If you come to here and you install it, I suggest you to install it. It will work for Excel. And we also have some quick start guide here. Click on that. You'll see some screenshots and how the guides we have there. And yeah, I suggest you, I strongly recommend you to use our Excel ID. You can see a screenshot here. And you can also always book a demo with one of our associates, and we'll give you a detailed demonstration of Excel adding, how powerful it is. And we also have lots of templates, like this screenshot here. It's a template. And the template will make it much easier for you to use. And okay, let me show you some demo. Actually, okay, this Excel ID is also available. It will also work for Google Sheets add-on. So you don't even need to have an Excel. As long as you have access to Google, and you can use it in a very similar way. And let me share my Excel ID here. Okay, new share. Let me share my Excel ID here. Yes, here. Okay, it's a blank Excel here, and you can see that if you come to here, once you install it, there'll be a this is a normal Excel. Okay, once you install it, you have a ribbon called GuruFocus. You have a ribbon called GuruFocus here, and click on that, and always log in first. Once log in, use the same login username, password as you have on GuruFocus website. Once you log in, you will be able to use it, and you can insert formula here. For instance, you can insert formula, very simple formula. Okay, if I just use Walmart example, and now very simply, I want to get stock price. I want to get current stock price. If you just do that, then say Walmart stock price is here. It's already here. And okay, if I don't have to put Walmart there, if I put Walmart here, for instance. And now if I continue to insert sticker, and instead of type Walmart here, I just click on this cell and I update it. You get same price. But now I can easily change to another company. For instance, I change to Moody's. And if I change to Intel, I change to Tesla. It gives you a stock price of any one you want to get. And you can not only get the current stock price, you can get the past stock price too. For instance, I want to get stock price from 2020 to today. If I think I just need to click on here, and I do a daily stock price, and also I want to show the dates. I want it to list vertically, sort order from the old to past. So now it should load data for me. Yes, you can see that the data is now here from 2020, the first day trading day of 2020 for Tesla price. I got all the historical price of Tesla, and now I can easily draw a chart for Tesla stock price. And if I change to another company, for instance, Moody's again, it will load it to a new company. If I change to Apple, and it will load. So this is a price data. So not only price data, you can get any stock data, any the fundamental data. For instance, I want to add the fundamental data, the revenue here. I want the ticker. I will just use same Apple here. I'll use the same cell here. The revenue, I'll use revenue here. And I want the date again from 2010, okay? Until today, I want annual data. And I want to show the date and orientation vertical from old to new. It will load. See, this is annual data, annual revenue data for Apple. It's here. All the numbers are in millions. So Apple actually for the last fiscal year has close to $400 billion of revenue. Now, if I change to another company, and both sides data will update automatically. So if I just showed revenue, if I show actually, I want another parameter, for whatever parameter you want, you just search here, because I want net income. So you just search here, you'll get it update. So now it's a net income data for Tesla. Tesla was losing money here until 2019. Now it has been making quite some money for Tesla. So that's the basic for the Excel add-in. You can get current data, you can get historical data. We have a reference here, formula reference, and you can get basically any parameter we're getting from our website. And I was showing you the segment data, which is something we added new segment data. Okay, let's try. I want to get segment data, and I want to insert formula. Again, I work with Tesla here, and I want segment data. I just type business segments. Okay, business segment data, and the date. If I want 2020 to today, and I want annual data. I want to show date. Orientation is vertical. So now let's see what I get. So order is sending. Now let's see what I get. Okay, you can see now I got the data we have for segment data. In case of Tesla, we have only, for 2 years, we have only 2 segments. One is automotive, the other is energy. So these are segmented. Now if I change to a different company, again, I change to Apple. All the data will update automatically. This here shows the segments for Apple here. And now if I change to a different company, Walmart in this case, and all the data will update. So it's a very powerful tool for you to get data from our servers using Excel. And the good thing is that you can build your own templates. We actually have lots of templates here. You can download here. If I download these templates, and it will, it shows all the templates that are available for download. And if, for instance, I want to download this 30-year financial data templates, if I just download it, and okay, I download it, then I open it in Excel. If I open it in Excel, and it should show the the templates. Let me open it. It's here. It's opening now. Okay, you can see that it's now open. This template is now open, and I'm ready to use it ready to use it for myself. And I always enable the editing tab, and now it's all updated. It will update the data, and we already it's similar to what we have on the 30-year financial page. You can see this is a trend line. There's different data, and this is the template. And now, if I just change the ticker again, and I should be able to update everything here. So it's a very powerful tool. Okay, seems like my sharing is locked to a different screen. Let me switch it. Okay, can see can see it now. I should be able to see now, just a little bit. The sharing is okay. Let me stop sharing first for now. Sharing, I stopped sharing. Now I will share again. Oh, it's switched. Okay, if I share now, can see that now it's shared a complete 30-year financial data of the of the template. So it's a very powerful tool, and I hope that you will start to use it. Any questions on that? Any questions on the Excel add-in? And again, I will show you where you can go to install it. Okay, let me, and now I go back, I will stop sharing and go back to share the web page instead. Okay, I closed it. So the Excel add-in it can be very, very powerful. Let me share it. It's here. It can be really powerful. And I encourage you to use it for your own research, and it can save lots of time. You can build you can build templates there, so that you can save lots of time for your research. That's how it works. Do we get questions for Excel? If not, okay, I will go on. I'll go on to the next part of my meeting. So now let's look at the changelog again. And the segment data is the one we just added. Okay, now one thing I want to mention actually, if we go to the all-in-one screener, we actually made some change to the all-in-one screener following the suggestion. Okay, you're getting that region errors probably because you don't have the subscription for that region. You can only get the stock data for the stocks that traded in the regions that you subscribe. Okay, now one change we made recently, I think it's quite useful, is to the all-in-one screener. We moved a filter called index membership here. We moved it to here. It used to be here. We moved it to this here, but we added the function which called exclude. Index membership is a very useful feature. We actually got lots of questions from our users about it. If you want to just filter among SP 500 companies, for instance, just click here, and you will be filtering only among SP 500 companies, so 500 of them. And if you want to NASDAQ, for instance, only NASDAQ 100 companies. You can filter it here. You just click on that. And now you will be filtering among the NASDAQ 100 companies only. You can, for instance, add other factors. Of course, you want to add the companies with good financial strength, 8 and above, for instance, profitability rank and 8 and above, and GF score, you want it at least 90, for instance. I just add some filters. For instance, I want to filter for high quality companies. Now, among the NASDAQ 100 companies, I have only 19 left. And I want to show their sales, for instance. I want to show their market cap. I click on that. And now if you look at the market cap companies, the largest market cap companies among NASDAQ 100, Microsoft is first. So seems like Apple is not among the NASDAQ 100 companies. And Google second, and NVIDIA the third. And these are quite some high quality companies with good, very high profitability. And Costco is actually in it, number 4, as number 4. Adobe, number 5. These are all some familiar companies. And now if I want to add other parameters, I can certainly add. But one thing we made change recently is exclude button. We added excluded button. So some people want to filter the companies which is, for instance, not in the SP 500. So you would go here, you click on that, you select SP 500, and here you click on exclude. You will be filtering among the companies that are not SP 500 companies. But still, because I have other filters here, GF score needs to be more than 90, and financial strength and profitability rank all have high ranks. Can see that the first company we got is Taiwan Semiconductors. Oh yeah, we all know that it's the largest semiconductor manufacturer in the world, and has good quality, very profitable. So that's why it's ranked first. But it's not a SP 500 company because it's not a US company. And of course, if I don't want those pink sheets traded on pink sheets, so I added not OTC stock. So as that, the first one, Taiwan Semiconductor, second BHP, which is an oil company. And if I want to know which industry it is in, I just click on here, actually display the industry. It should display the industry now. So BHP is metals and mining company. Rio, it's metal and mining company. If I want to know where the country is, which country it's from, I click on here, and now it will add where it's from. Infosys, it's number 4. It's a software company based in India, although it has been doing really well, has good profitability and high quality, but it's not a SP 500 company. So this filter will help you to find some companies that may be overlooked or may not be liked by Wall Street, but their stock can do pretty well, very well over long term. If in the case of Infosys, I just take a look. Infosys stock. Okay, let's just look, and it shows that okay, last 5 years again about 112%. Now, if I go back to my screener, okay, I'm still here. So that's how you use this index membership here, and that can be really useful by lots of users are asking us about this filter. Okay, any questions? Any questions about the all-in-one screener? Seems like people, our audience are very quiet today, mostly. Okay, that's the all-in-one screener. And of course, if you're not familiar, I suggest you to play with it more. And I display some features here. You can actually display in charts. You can see the charts. And this is GF score, and you can also see the valuation GF value of all the stocks that come out of the filter. Peter Lynch earnings line, which is the Peter Lynch line, median P ratio, if the stock are traded at median P, where it should be, which is this brown line here. And also if it traded at median PS of the last 10 years, where the stock should be. So this blue line here, median price to book value. If it's traded median price to book value, where it should be. So also you can look at the historical P ratio of the stocks all in one screen. The historical P ratio. Now, okay, it takes a little bit to load. This is a dividend yield. Okay, this is a historical P ratio. It takes a little bit time to load because I have lots of companies here. It takes some time to load. Okay, now we look at the dividend yield of other companies. You can see that the historical dividend charts for all these companies. And Real seems like has a very high dividend yield of 9%, used to be even higher. And my experience was that when a stock is traded at high dividend yield in historical levels, historical highest levels, it's usually worth looking into it. Okay, intrinsic value versus stock price. It depends on how you define intrinsic value. If you talk about the GF value we have here, I think we have one valuation. It's called valuation ratio. For valuation ratio, we have lots of those. We have lots of them. So it really depends on how you define intrinsic value. And if you're not sure, you can always search. You can always search here. So we actually don't have a filter called intrinsic value, but we have GF. Okay, price to GF value. If you think that the intrinsic value is our price to GF value, okay, now it's here. So you just search it here. It highlights it for you. You can ask a range. Then I want the price to GF value between 0.5 to 0.6. Then it will filter for you. It will filter for you for the data for the data that you have. Okay, you can always customize the view and see the active filters. You can also do backtesting if you're not familiar with it. You can also do backtesting. Okay, and whenever you cannot find a filter, you do a search here. Most likely you'll find it. If you still cannot find it, can create one with our customized function. You can add a filter here. You can click on this customized and add a customized filter here, but with all the fields we have here, the fundamental parameters and valuation parameters, profitability parameter, all the parameters here you can use in your filters, in your filter, and to create a customized one. It's called customized filter. I'll give you an example. If I have one called test customize, and I'm not sure what you want. I want dividend payout ratio, for instance, divide by, I don't know, or whatever you want. Cost of goods sold, just some random. So if this filter I already defined the results, actually it's already shown here for different companies, Apple, Google, Amazon already shows here because Amazon, Google doesn't pay dividend. So in this case, it's very small number. Because this doesn't make very much sense, and I will do another one. Okay, I will do net. You can search here. Net income, for instance, divide by cost of goods sold. For whatever reason, I want to do this. Cost of goods sold. Okay, now I have the parameter. You can see the net income auto over cost of goods sold. And now you can see for these companies, you can already see the results. If I just display the results, and if I confirm it, it should be able to, okay, I need to tell it, I need greater than a value, for instance, I need to be greater than 0.1. For instance, now I confirm it. And now see this filter is not active, and it will be added to the other parameters I have set, and the results is here. The results is here. If I remove this exclude checkbox, so I want to select filter among SP500 companies, and now you can see that that's what I got. With all these parameters together, that's what I got. Okay. Any questions on the all-in-one screener? Okay, seems like I have one question. Okay, I would love to know my thoughts on the market given the gains in January. Okay, that's a very interesting question, Rafa. It's about the prediction about the market. And I think the valuation, the overall market valuation is actually not that cheap. It's not that cheap. It's not as expensive as last year, of course, the beginning of last year, this time. And but it's still not that cheap. Although many companies, many profitable companies went down a lot, but the large companies actually, profitable companies, is not cheap. But I think their profitability will still be okay. They may go down some, but I don't think they will go down a lot. Like Microsoft, Apple, the giant companies, Google, I think they will still be very extremely profitable. And also, I think that I don't know if there is a recession, although it seems like the odds is less and less. But I think even if there is a recession, it will be a very shallow recession. It will not be a huge, a deep recession. And like what we had in 2001, 2008, we had a very deep recession. But this one, even if we have one, the recession will be not that shallow, not that deep. It will be a shallow recession because the large companies will still be very profitable, and they have very strong financial strength, financial balance sheet. In 2001 and 2008, both recessions, there were very large companies went bankrupt. That went bankrupt. For instance, in 2001, the largest telecom companies, WorldCom, went bankrupt. And Global Crossing, a large equipment maker like Nortel Networks, they all disappeared, bankrupt and disappeared. And in 2008, we had a bankrupt Washington Mutual, which was the largest savings and loan bank at the time. Of course, we had the Lehman Brothers and Bear Stearns, had a large impact to Wall Street and to the economy, to the financial situation of the country. But this time, I don't see any of those. So I think even if there is a recession, there won't be a large bankruptcies like we had before. And the large companies will still do pretty well. Might be some headwinds, but it will be a small headwind. That's what I thought, what I think. And any other questions? If we don't have any questions, I will talk about our conference a little more here. Okay, okay. What are my favorite gurus focus screens? That's an interesting question. In general, I like high quality companies. Um, so some of favorite ones things here, high quality, low capex companies. That's one of my favorite. So actually, and historical high dividend yield. I sometimes look at this one to look at the stocks that are with historical high dividend yield, and then I look at quality. I make sure the qualities are good. As I said, when they trade at historical higher dividend yield, usually it's quite interesting. And I also like this our Guru broadest owned portfolio. Well, it's under our model portfolios. It's called Guru broadest owned portfolio. This one, it's based on Guru broadest held portfolio. Here it shows the current holdings. This portfolio has been doing pretty well. It has a long history. It has a history of 17 years. And you can see the last 10 years, it outperformed market at about 3% a year on average. It doesn't outperform every year. Last year, it underperformed, but most of the time, it outperforms. So I look at these stocks too. Yeah, well, that's what I have. Actually, the ETF I started is based on this strategy. And that's some of my favorite company and some of my favorite screens. And okay, now I talk about a little bit more about the conference. The conference again, it will be on the evening and the day before Berkshire Hathaway annual meeting in Omaha. It will be in Hilton, downtown Hilton, just next to the Berkshire Hathaway meeting where the meeting is. And we usually invite about 10 speakers to speak, and I hope you can come. The seats are actually quite limited. We have the room, this time the room we got is smaller than what we had in DoubleTree. They'll be limited strictly to 120 seats. And I hope to see you there. And again, it's a time to listen to the greatest investors, and also to network among fellow investors, fellow long-term fundamental-oriented value investors. And of course, you'll see me that there too. Okay, that's about what I have. And thank you all for coming. The weather is cold. Stay warm. And hope to see you again next month. This meeting will always be the first Wednesday of each month, and hope so. Next month it will be March 1st. Actually, be March 1st. So mark your calendar for March 1st, and I will be happy to see you again next time. Thank you. Here.